Welcome to the Theo video report for December 16th, 2015. This is Don Kaufman. It ain't over until Janet Yellen says it's over. Well, it's over. Zero interest rate policy. It's all over. So the Fed does decide, of course, to raise the interest rates today. And what did the market do? S&P's up 30 handles right now with just about 10 minutes to go to the close. But let's dig a little deeper than on the surface over here. Let's dig a little deeper than the fact that the SPOOs have exploded off of that announcement. All right, so go right into it here. If you want to take a look, right at 12 noon, and that's 12 noon Mountain Time, the FOMC announcement comes out. Pretty much for the most part, there's a slight dip to the downside, but it's been off to the races thereafter. And one thing I do want to point out, the volume. It's been there today. I mean, traders are kind of getting it done. So very, very decisive move to the upside. You can't tell the excitement has just left my voice. Yeah, an up move. I'm a volatility guy. I enjoy volatility to the upside. But I'm going to tell you this. Some of this move may not yet be over. Let's point out a few areas, okay, that really kind of took us to the upside. And with the S&P's up 30 right now, you've got to look at this same 4 to 5 stocks that we've been pointing out all week long. And those have been, again, Facebook, Netflix, Google, Amazon, all having explosive 2+% moves to the upside. And they've actually been at kind of the forefront of this, order flow that is exploding to the upside. Again, the FOMC announcement, come on, there's absolutely no predictability to that in any way, shape, or form. Sure, you're going to get the pundits out there. I was definitely bullish. I was definitely bearish. Nevertheless, this is what, I was saying earlier in the week. Tightly wrap your risk, whether you're long, whether you're short, okay? You're both going to be wrong at some point in the next few days over here. So with the S&Ps now up 31 points coming into the close, let's see what risk says right now, okay? And I'm not looking necessarily over at the VIX here. We're going to go back into the SPX, okay? And we're going to look at the SPX options. Now, the SPX options, they do have an expiration this week. They're done. Today is Wednesday. Tomorrow, the Thursday. They're done tomorrow. What's their volatility looking like? So the volatility abates to a degree, but we're still looking at this plus or minus 26-point move between today and roughly really Friday morning. So keep that in mind over there. We're still pricing in like a 26-point move. It's pretty much what we saw today. Okay. Now let's go a little further. Let's go into the spiders. Again, the expected moves are just, I'm emphatic about these because, markets, it's not just about being directionally right or wrong. Oh, I'm bullish, I'm bearish. Okay? The vast amount of the professional trading world these days doesn't necessarily cater to being bullish or bearish because we all recognize you don't want to get in the way of an FOMC announcement when there's going to be billions of dollars flying and just order flow goes nuts after it. So as I go into the spiders now, and this is one of the reasons I'm so emphatic about it, you look at the spiders, we're still expecting a 32-point move in the S&Ps through the end of the week. So here we are, on Wednesday with now just, about 6 minutes to go to the close, and we're still expecting a 30-point move. So, if you've made up your mind, that's it, we're going up, okay? The wrong move could be your last move, and that's why it's so important to just kind of get in tune with these expected moves. Now, again, you're like, well, the FOMC announcement, it's out, but the markets are still displaying a 19% volatility, which is elevated given the fact that we've seen the S&Ps. Well, let's go look at the spiders specifically. We've seen the S&Ps now rally how far? Okay. We just dipped to 200 the other day on the spiders. Now we're sitting at like 208, or should I put this in SPX terms? Okay. What are we really looking at over here? Almost an 80-point range inside of the SPX. And we're still projecting, again, a fairly decent range over here. So it ain't over just yet in terms of the move. Yes, this has been an explosive bounce back to the upside over here, but we're looking, and again, I'll put it in SPX terms, we're looking roughly at a 1990 move all the way back into the 2075, 2076 handle. Roughly, again, an 80-point move inside of the markets, which that's what's happened Monday, Tuesday, Wednesday. So let's recollect that earlier this week, okay, we're going to go back over here. We're going to go to the Analyze tab. We're going to go to Think Back, because this is the stuff that in the end, this is what matters. This is what pays, okay? If you're trading any options in any way, shape, or form, you go back into Think Back and you just recollect. All right, so here we are right now on the 16th. What were we looking like this weekend? Okay, we were expecting this entire week, and again, I'm using like the 5-day options in here. The entire week, we're expecting about a 75-point move. Now, granted, that's in the SPX, and the irony is, with the move right now, it's precisely what we've seen. Now, you got to remember that this is a probability of expiring. Okay, so this is probability of expiring here, and all I did was went into back data. I just look at Sunday, and I said, well, what was a 5-day move looking like? And the 5-day move was telling you we're going to move plus or minus about $75. So you go to the chart and you realize that over the last 3 days, we've already seen that expected move. So is there a probability we go higher? Absolutely. Tomorrow we could even go higher over there. There's also a pretty good chance if we do go higher, we could pull right back inside of this neighborhood that we're living in right now. So, okay, there's a good chance that we could see some kind of reversal Thursday or Friday this week if we just forge a little bit higher. And that's what a lot of traders, they're going to be looking for. Okay, the other thing I want to look at is the volatility futures, because the volatility futures give you a feel. Have traders taken the risk off the table, or is it just like, that's it, I'm freaking out to the upside? Is this just a blow-off kind of move to the upside, or is it something more realistic? In essence, to be able to see that, we're going to have to look at the volatility futures, and we're not going to look at the volatility futures that everybody seems to fixate on, okay? You got to go a little further out in time on the volatility futures. Now, again, the active contract now is the 35-day volatility futures. They're down about a point, but they're trading here at what? 1780. Go a little bit further out in time, extract all these weeklies, then look at the next volatility future out. It's trading at about 1837. So the 35-day volatility future, okay, has in fact dropped now, okay, quite handily below the February volatility future. And you can see they're moving in relative lockstep over here. It's still, okay, fairly close. That is, the 1785 is still fairly close to the 1843. And again, if you've never heard me talk about this before, what I'm actually looking at is the differential of volatility from one expiration to the next. And normally the skew is something like this, where it goes, all right, here we are again at 1790, then we go out here to 1840 and change, and we go on and on. But if you looked last week, the vol skew was actually flat, indicating that risk in the present was as great as risk in the past. This differential, okay, is still there. So yeah, it's 1790, but normally the differential between front to back, that first month series, is usually closer to $1. It's still sitting at about 50 cents. So traders are telling you they're still a bit tentative on this entire move to the upside. Even after a 75-point up move, okay, traders are still not completely buying into the fact, all right, markets have rallied. What you want to watch have been, again, these leader stocks. Amazon, okay, Google, on a percentage basis, they're outpacing the marketplace by just monstrous levels. Now, we are in a situation here that if you looked at something like an Amazon, okay, like a Google, they just got hit the last couple of days. They've bounced back quite considerably. If markets are to take a turn to the downside in the next few days, you'll likely see some of these underlyings get hit the hardest, okay? I don't have to go out on a limb to say that a 75-point move to the upside in the S&Ps is overbought territory. Lots of traders are going to agree with me. Lots of traders are also going to look for the same thing we're going to look for. Okay, is there going to be a reversal on Thursday or Friday? We've seen this after subsequent FOMC meetings out there, but there's a reality, okay, of FOMC announcements. There's no rules. All rules are off the table when the FOMC announcement, okay, and there's kind of our closing bell. All rules are really off the table. Again, I'm actually looking for, albeit a kind of mild reversal to the downside come Thursday, Friday this week. I don't think we're necessarily going to be off to the sunset and right back into that 2100 level. So again, I do not believe that we're off to the races and going to be back into this 2100 level. More or less, I feel we're actually going to migrate closer back to the to that 2050 level inside of the next couple of days and moderate the market just a little bit. Again, 3 days, all right, 70, 80 point range inside of the S&Ps. We're a little stretched thin to the upside. Thanks a lot, everybody, here for joining us for the Theo video report. This is Don Kaufman. Be back on tomorrow.